Good afternoon, everyone. Welcome once again to This Week and What a Week It Has Been. Lots of news. We'll cover that today. We'll also talk about anything that you guys want to talk about. I'll answer questions, all of that fun stuff as we do each and every week. We also, of course, it's exciting. We got a lot of exciting stuff coming up in the next couple of weeks. So we're going to talk a little bit about that as well. But before we do that, I want to very quickly say hello to everybody who is in the chat. And we've got Enid saying, good afternoon, everyone. And Jonathan's in here asking if the banana bread is ready yet. It smells so delicious. Yes, the banana bread is coming out of the oven as we speak, the metaphorical oven. I don't have any real banana bread on hand at the moment. Enid says, oh, and I'm not there. Uh-oh. Somehow she's typing, but not here. I'll have to hear more on this, Enid. I'm not sure what you mean. Richard says hello, and Stan is saying, happy Sunday, everyone. Yes, absolutely. I'm so happy to see you guys here today. Also, a huge shout out to those of you who can't make it today and who are watching this on a replay. You guys are just as important, and I certainly appreciate you guys taking the time to either check this out live or watch it on the replay. It's all good, which is great. Okay, before we jump into the news, I'm going to talk a little bit about, let me see. Oh, I'm not there for the smelling of the banana bread. Okay, there we go. Good. So you are here then, but it's just the banana bread that you can't smell. Fantastic. All right. So I've mentioned stuff that's going down. Let's talk a tiny bit. I always, at the beginning, like to just point out a little bit about Blossom. Blossom is that wonderful social media app where you guys can connect to myself, as well as all of the other social media folks right across Canada. So everybody from Brandon Beavis and Canadian in a T-shirt to some of the lesser well-known folks as well. We're all over there. It's a great place to interact, to ask questions, to get some tips, maybe just get some ideas on stocks that you may want to take a look at. So I definitely would recommend it. There's a link down below as normal. If you head over there, be sure to download that Blossom and be sure to follow me up. When you get there, I'll follow you back because I want to see what you guys are posting. And I'll throw my 2 cents in over there as well. I certainly like to do that. So yeah, that's Blossom. Coming up, we got a couple little things going on for the channel. One, we've been coming up this week. We'll have been monetized for 1 week, but for 1 year. So a year past monetization, I decided to jump on the bandwagon or the banana bread wagon and do one of those how much I made in YouTube for a year video. So we got that coming up. I believe that's next Thursday. So the deep dive you guys are currently voting on right now, I believe Dollarama's leading. That one will be showing not this coming Friday, but the following Friday. So you guys have 2 weeks to get all your votes in on that one. The other thing we have coming up is the 2-year anniversary of the channel. That'll be on October 7th. So our very first video was 2 years ago on October 7th. And well, we're now like 200 and some odd videos past that. So that's really, really, really great. So I'm looking forward to that. I'm going to do a live stream for that. I haven't figured out what I'm doing in that live stream yet, but I'm going to figure something out, some kind of a theme to put in there. You guys, as always, I always love your input. So if you got ideas, throw them at me. Otherwise, I'll just come up with something. But that's going to be a Saturday night stream. We'll do that on the 7th. It's going to be at 7 p.m. So that'll be a live stream, of course, for everybody. All right. Now, before we get to the news, we get some more folks popping in. We got Chad saying good day all. And Chad saying hit that like button. Yes, absolutely. Slam that like button until it turns blue. Unless you're colorblind, then slam that like button until it turns the color you normally see for blue. Or is blue even... No, it's actually red-green, isn't it, for most colorblind folks? I don't know, but maybe there is a blue color blindness out there. I'm not sure. Anyway, just hit that button before I go into a big ramble. Jill says hi. Enid says good job at Chad. And we got Mary Finn in the house. It's her first time as a member. Yes, Mary reached out to me last week to ask how to become a channel member. And so I sent her the the good old link there. And there's a link down below for becoming a channel member. Or even when you look at your actual thing, there's a little right underneath, I think it's right near the subscribe button. There's like a little, join the channel member. That will let you join the channel as well. When you join the channel, you do get an exclusive live stream every month. And I'm also looking to do a few extra things. So that I think is going to be really, really cool. I actually we got that challenge going on, that 0 to 100K with that brand new TFSA. I sent a mid-challenge update on that just so they could see where that is going at the moment. That one also is coming out within the next couple of weeks because we're getting really close to the end of the month again. So I'm looking forward to that. Chad has said, always get the hard jobs. And Jonathan gently fondled the like button. As long as you turned it blue, my friend, as long as you turned it blue. Yeah, absolutely. That's definitely funny. All right, let's jump into our first news story so we can get some of the news out of the way. So we had the U.S. Fed rate decision out this week, and it certainly had an impact on things, that's for sure. So they decided not to raise their prime rate down in the U.S. So it's still in that range of 5.25 to 5.5%. Now, they did say that they would be open to another hike before the end of the year. The markets, of course, didn't like that. And Powell also indicated they may have to get used to having higher inflation for some time. The markets didn't like that either. So as a result of this Fed hike, what we're looking at is a few different things that happened. One, the U.S. dollar pretty much flatlined the rest of the week. The 2-year Treasury, it spiked. The 2-year Treasury yield, it went up to 5.14%. Now, the 10-year yield's at 4.475%. So those are still inverted. So an inverted yield is one of the signs of a potential recession. So keep that in mind. That's still in the books, even though everybody's believing we're going to have a soft landing. But a lot of the signs are still pointing to a recession. And the other big thing is, well, if you watch the market since Wednesday, holy banana bread, it was in the red. It did recover a little bit on Friday, well, at least first half of Friday, and then it fell right back into the red again. So we had a little bit of a redathon for sure. Hopefully, though, a lot of times I find that these things usually, new week, everything changes. So hopefully we get a green week this week. I'm hoping we might see a little bit of lingering red on Monday, but I'm hoping by Tuesday we can get back in the green, have a nice little week in the green. But those of you who are looking for entry points, this red is probably one of the best things that could happen to you because, you are looking at some pretty good spots to get into that market. Okay. That was the Fed. Let's jump to the next one. So CPP or APP. So the Canada Pension Plan. There was some news going on about there, all about Alberta. So good old Alberta is thinking, we would like to maybe move away from the Canada Pension Plan and kind of go the same route that Quebec does, like an Alberta pension plan. Now, part of this was fueled by a report that came out saying that Alberta would be technically entitled to $334 billion if they left the CPP. And that's part of the whole CPP's assets because Alberta has paid a lot more into it. People make more money there, thus a lot more people are towards the maximum CPP contribution. And Alberta's a much younger province, so there's a lot more workers opposed to people who are retired, hence more money going into CPP. And that's why they have such a huge skew. Now, they have in the past, Alberta has thought about this in the past, but now we're at a situation where basically what we're looking at is they are saying, the current Conservative government is saying, well, we kind of think this might be the time to do it. We're not going to just do it. What we'll do is we'll hold a referendum. So that's something that's probably coming down in the future. Now, I know the NDP party in Alberta said, hey, if you elect us into the next election, we'll get rid of that. Don't worry. We will not do that whole Alberta pension plan. So what do you guys think? Are any of you guys in Alberta? Are you for it? Are you against it? I think the rest of Canada might be a little bit like, this could be a problem for us because that's a lot of money taken out of that fund if they were to take that amount. But keep in mind too, I'm sure there'll be arguments and fights over the exact dollar amount that would. And I think for that 334 million, I believe it was 2027. So if they pulled it out in 2027, that's when they would be entitled to that 334, or I mean, Vic is saying 335 billion dollars. Now, well, we won't split between that $1 billion. Okay. Oh, that was kind of fun. Let's see here. Where are we at? Vic is in the house. Hello, Vic. Good to see you. And we have a brand new channel member. Enid has joined the Banana Bread Militia folk. I guess I don't know if maybe we're calling everybody Banana Bread Militia, but she's a channel member. I do want to create new badges for that, so I got to do that. That's on my list to do of things to get done before the end of the year. So welcome, Enid. You can catch up on all of the content that's been exclusively to channels when you do join. So that is awesome. Now you're now the new one. You've just pushed Barry into veteran status. Chad says Saskatchewan has SPP pay an average 8.3% ROI. I did not know that. There we go. So Saskatchewan pension plan, and it's funny, everybody forgets about that. You hear about the Quebec pension plan all the time, but I never hear about the SPP. Good to know. Anyone can join. Alberta is not entitled to 3. Oh, so Vic said that it's not entitled, but this was one report that said that's what they should be entitled to. So keep in mind, I don't see the feds being willing to release that. I see a bit of a fight between the two if that were to happen. But it's interesting. I don't know how the referendum would actually end because I don't know how Albertans are feeling about this. I can understand where you have a lot of younger people in Alberta. They're thinking, well, why do we want to support the older population in the rest of the country when we could put that all together, of course, into our, save it and invest it for our own folks when for us when we get up there. So we'll have to see how that works out. King of Day is here. Yo, King of Day in the house. Happy Sunday, y'all. Hello there, Candace. Hi, King of Day. Welcome. And Vic says, proper actuarial analysis has not been completed. Yeah, absolutely. This was just one report that came out, and I don't even know who did the report. So that's going to be something that they fight over quite a bit. And Vic says the economists estimate 120 to 130 billion. And you know what? That actually sounds more reasonable. So I will definitely say that, but we'll have to take a look and see how this is all going to work out. I think the money value, if they were to separate, I think it would definitely be something that we would be arguing over for some time. Alberta is a young province. Lord help us when we all become old. Yeah, it happens to everybody. Hopefully, when you guys all become old, those little pensions like that won't be as important because you've been doing the investing gig and you guys have got yourselves a nice, healthy passive income coming into your account at that point in time. Chad says the majority of food comes from the West. So if you eat today, thank a Canadian farmer. Yeah, absolutely. I love Canadian farmers. And I eat a lot of vegetables too. So, but I mean, keep in mind also it's all of the wheat. Almost everything that you probably eat has been touched in one way, shape, or form by the Canadian farmers. Baby boomers will eat up most of the CPP. There will be, yeah, that's one of those things right now. We have a situation where the baby boomers they're getting ready to retire. And a lot of them have retired. So that wave is still moving into retirement. So yeah, there's going to be a lot of stuff that's going to be eaten up by the baby boomers. And speaking of the baby boomers, that takes us to our next story. Less babies. All right. So I kind of hinted at this story, I think last week. So we got a situation right now where people are not having as many babies as they used to. Part of the big reason is that it's incredibly expensive to have a baby. So the cost of raising a baby in our new inflated reality has left many people opting to simply not have not have any children. Stats Canada has just come out with a report that says 1/3 of young Canadians do not feel they can afford children. So we're at a point that what this means is that we have a declining fertility rate, and that's not a good thing for the economy, because you need to keep the workers coming. You need to keep them coming along. If you're not, then you're not going to have, well, you won't have people in the jobs. That's going to cause issues. We've already seen some of these issues when we had the labor shortage. So that is a bad thing. Now, what we're doing in Canada is we've been basically turning up the immigration. So whether that will work or not, in theory it should. In theory, by basically having as much immigration as possible, that should help fill up the hole of this issue with fertility. But it is a bigger problem, and I think we need to get to a point where people can afford to have children. If we have a situation where people can't afford children, then perhaps we need to start look at better incentives for having children. Whether it be better tax breaks or whether it be just better funding. I remember a story I think I covered on this channel, probably 6 months ago. I don't know if it was Russia. It might have been Russia, where they were paying people to have kids, and actually a half decent amount. So that's something to keep in mind that we may be looking at down the road in Canada. So, Vic says only 30% vote. So if they pose it as is, if you don't want that, means you want APP, then government can change it. We just blew through our oil savings from Heritage Trust now to blow our future pensions. Yeah. Yeah. I mean, when it comes to something like that, if you got a referendum on the book, if it means anything to you, you need to get out and vote. See, Chad says wheat, mustard, canola, flax, beef, bison, chickens, etc. I eat a lot of chickens. So, yeah. Vic says can't afford rent, mortgage, or children. Yeah, a lot of people are in that situation, and it hasn't really gotten better. I mean, a lot of people can't even afford to feed themselves, let alone, a kiddo. Let's see here. Chad says, East beef milk, leave a jug of milk outside, see what happens, turn solid. What are we drinking? Humans are the only creatures that drink milk regularly after birth. Very bad for people that have arthritis. Yeah, so I mean, it is true. Milk is designed to basically to grow things fast, because that's why you're giving it to the baby. Like there's also, I believe there's a chemical in it called colostrum that really sort of helps stimulate growth overall. So that's what milk is technically designed for. Personally, I don't get very much dairy milk. On my cereal, and I know some people will argue against the cereal, but on the cereal, I actually use cashew milk. So, but even then, I don't get a lot. That's the only time I really have it in the day. I do have a little bit of cream in my coffee. So that's kind of where I stand on milk. Let's see. Candace, I waited for you at W or at YOW, but just took a cab. Ottawa cabbies or something else. No seatbelts after 6 p.m. Really? That's kind of weird. I think I've taken a cab once here. Most of the time, it's pretty much Ubers. Like the Ubers I find are pretty darn good in Ottawa. So yeah. Next time you're in town, Vic, take an Uber. And actually, the next story is about Ubers, but we'll get there in just a second. Chad says NDP equal liberal light. Yeah. Chad, which province you in? And Chad is in the beautiful province of Saskatchewan. Here's something I did the first time I drove through the prairies. The people I was driving with, they just pulled over in the middle of prairies at night, and they were like, "Come on, let's get out." I'm like, "What? Okay." And so we got out. We just, it was a clear night, and they're like, "Okay, look up at the stars and spin." So I was like, okay. I thought it was stupid, but I did it, and it was like, oh, that is kind of cool, because where you have no real horizons, everything being flat, nothing blocking your view, it was actually pretty cool. Chad left Ontario back in 2008. Can't afford money to have smartphones, so no Uber app. Uh-oh. Yeah. Oh, a flip phone. Holy banana bread. Well, hopefully your investments work out for you, Vic, so you can at least get a very basic smartphone. Like some of the older ones you can get pretty cheap. Actually, if you look on Marketplace, you'd be surprised. A lot of people sometimes get their new phone and they nothing wrong with their old one. They throw it on Marketplace and you can usually, let's say they throw it on for 50 bucks, you know, call them up and say, hey, well, will you take 40 or 30? Well, usually if you're willing to pay 40, ask for 30. That way they can try to beat you back up to 40. It's kind of that whole thing with haggling. So I always tell my mom, I said, look, if you're selling something, how much do you want for it? She says, well, I want 30 bucks. I'm like, okay, put it on for 50. Let somebody beat you down. Maybe they beat you all the way down to 30, in which case you got what you wanted. But chances are if they throw 30 back at you, you could hit them with 40 and then they might go for it and you might end up with more money overall. So the art of haggling. And Chad says, bought my house, 2,700 square feet, 1.5 acres for 20 G cash. All right. So 20 grand. Not bad. Not bad. Now, how long ago did you buy your house, though? Let me ask that question, because I'm wondering if you were to try to buy that same thing today, how much you'd be looking at. I know it wouldn't be 20 grand. If it is, I think I'm moving to Saskatchewan. And I have APLY stock though. Okay, that's good. I do like the Apple stock. Last used phones in Ontario. So 2016. Holy banana bread. That's not that long ago. I mean, yes, it's before the price explosion, but 20 grand. Now, was that just the land though? Like you had to build your house on that land, I'm assuming? Because you're saying that it would be worth 35 to 40,000 today. Okay. That makes sense. All right. I hinted at that next story. Let's just get it out of the way. So zero emissions. So Toronto is thinking about mandating a zero emission policy for any vehicles for hire. So this would include taxis, Ubers, and Lyfts. And if they go ahead with it, and it looks like they're leaning that way. They already do this, I believe, in New York City, for example. This would then be mandatory by 2031 for all of all of your ride vehicles to be zero emission, so electric vehicles. Now, here's the interesting thing, both Uber and Lyft are already moving in that direction. They have a goal already to be emission-free by 2040. So this would be a little bit of a move up on it. But here's the downside. If you mandate it, there will probably be that overlap period in the early 2030s where you're going to find a shortage of like Ubers and Lyfts because of people who would normally be doing it but don't have electric vehicles. Plus, in addition to that, Toronto needs more charging stations if they really want to be able to support all of those electric vehicles. I believe right now they have something like, I saw the number earlier, and this is a wild guess. I thought it was like 2,500 charging stations, or it might have been 1,500. I'm not 100% sure, but they do have a shortage of charging stations. So that would be something that if they go ahead with this, they got to really work on getting some of those charging stations up as well. Vic says, do people still want 800,000 for a house in Prince Albert? I don't know, but I wouldn't be surprised. I would not be surprised. Saskatchewan cheap home came with it. Okay, that's not too bad then. Saskatchewan is one of the cheaper places that you could live in. In Canada. And if you're not really a prairie person, there are some pretty half-decent cities like Saskatoon, for example, would probably be a wonderful place to live, and you can probably get reasonable. You could probably get a reasonable house out in that vicinity where you're not paying, $1 million. And I don't think you could find a house for $1 million out there. Well, you probably could, but I don't think your typical house. Who wants to live in PA? Average house in Saskatchewan, 274,000 if you live in a major city. So yeah, there we go, right there. And 380,000 for a high end. Holy banana bread, that's not too bad. And Vic likes the riders, the Rough Riders, I believe. I don't follow the CFL, but I'm pretty sure that's the team name. Correct me if I'm wrong. Zach's in the house. There's a hi from Zach. And plus no time change in Saskatchewan. That's a plus. That time change annoys me. I don't know why we still have it. We should follow Saskatchewan's example and not have the time change anymore. But the reality is, unless, especially with the bigger places like Ontario, unless they do it in the States, they're not going to, they won't do it up here. If the States were to get rid of time changes, it would happen in Canada so fast. It would be great. But the US tends to be slow. I mean, heck, they're still on the imperial system opposed to the metric system. And part of that the whole situation is that it would cost them a ton of money to actually change all of the road signs and stuff. But you'll notice more and more in the States, a lot of road signs are now coming up with both readings on it. So, 60 miles an hour, 100 kilometers, or whatever 60 miles an hour is. So you're starting to see this in some states. Probably, I imagine you see that even more in the more northern states because they have more Canadians coming down. So, but it'd be nice to see us all on the same system. And Chad says, never late nor early. Not a bad thing. All right. Oh, nice little sip. Zach says, Banjo Bowl, our Blue Bombers cooked them riders. Okay. Vic says, are there any airports in Saskatchewan? Yes, there are airports in Saskatchewan. Let's see. Chad says, go paint chow all. Troy Westwood has the best quip about Banjo Bowl. Funny guy. See, I don't even know what this Banjo Bowl is. I assume it's part of the CFL, right? And Zach says, haha. Okay. All right. Let's pull up the next news story while I still laugh in the back of my head about the name Banjo Bowl. So an oil shortage. Now, reading that, you probably, well, if you read the description, you know what I'm talking about. But reading that, you probably were thinking about oil, but we're actually talking about olive oil. So olive oil processes, excuse me, it's like I'm learning how to talk. Holy cow. No, the olive oil right now, we're in a bit of a drought. And it's because of, well, actual weather droughts. So prices in Spain, and this is even more than Spain, but prices worldwide have actually jumped to 8,900 per ton in September. So we're looking at about 130% annual increase in the cost of olive oil. The reason for this is that Spain has had their third hottest summer on record that was just filled with absolute droughts. Now, normally Spain produces half of the entire supply, half of the world supply of olive oil. Now, of that half, Spain only produced half of what they normally do. So we're basically looking at, because of the droughts in Spain, we've lost 25% of the world's olive oil supply. Hence, prices are going up. Here's the interesting thing, and I never thought I would be talking about this, but olive oil theft is on the rise. So apparently, one mill in Spain reported that 50,000 liters were stolen last month. In the back of my mind, I've got these guys in like ninja suits going in to steal olive oil, and it really, really amuses me. Vix has nice videos next week. Absolutely. Yeah, I'm looking forward to the next 2 weeks and some of the content that we got coming up. Brian has made it in the house. Hello, Brian. Good to see you. The Banjo Bowl is just the biggest rivalry in CFL. It's Winnipeg versus Saskatchewan. Okay, all right. All right. Chad says, in Manitoba, the highest stab rate in Canada. Who wants to live there? Oh, wow. That's interesting. See, I'm from Nova Scotia, where somebody might get charged trying to stab somebody with like a butter knife. It's not that violent. Well, it's usually not that violent. Let's see. Zach, did you get my reference about Troy Westwood? Once again, all of the CFL stuff. Let's see. Enid says, bought olive oil from Costco. 3 Kings for the next year. Heard the price will double. If you love the olive oil and you see a sale on right now, get it while you can. Enid was smart getting her whole year supply of olive oil. Zach says Winnipeg is a nice city. The violence is very segregated or segregated. There we go. That's not too bad. It's kind of the same thing. Like even when I lived in Halifax, most places were pretty good, but there's places that you wouldn't want to go to because, of just the potential for violence. Pretty much the whole city of Dartmouth. But anyway, well, not the whole city, just parts of Dartmouth. And there's a few places downtown Halifax that are a little bit rough. Now, here in Ottawa, it's actually, I don't even know where the bad area in Ottawa is. Like, this is a really tame city. Enid says three kinds, not kings. Okay, awesome. Winnipeg has mosquitoes. Yeah, I think Winnipeg's the only place where the mosquitoes have their own ski masks. I mean, it's just anyway, that's just a bad joke. Zach says I did at Vic Gill. Ha 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 ha. All right. So that was our oil shortage. So the Canadian CPI came out this week, guys. So it's pretty much inflation back on the rise a little bit. So the CPI rose to 4% from 3.3%. So it's more than they anticipated. The core also rose to 4% from 3.7%. Now, the biggest driver in this has been, well, the rent going up and up and up. So rent was up 6.5% year over year compared to 5.5% in July. And mortgage interest costs, those are up over 80% since the Bank of Canada started raising all of those interest rates. So I think that's a lot of the big things driving. Plus, keep in mind, oil's going back up and we are looking at higher. Well, for the most part, we're looking at higher gas prices. I think this last week, we've seen a little bit of relief in some of the prices. I think in a few provinces, we actually had gas going down. I think Nova Scotia it went down, but I believe in New Brunswick, it went up. So we'll have to see how this is all going out. Now, the next Bank of Canada meeting for price hikes, I believe it's October 25th. So we got a little bit of time. We've got more data. We got more jobs data and stuff to come out before they make up their mind. I still think they're going to, it's funny. I actually thought they were going to raise it on this one, but it's really hard to tell what they plan to do because, and I think I mentioned this in a short of all things, the Bank of Canada is trying to make it look like they got that rate hike right on the table, just waiting because they kind of want people not to second guess it. Like, when they do pivot, if we know they pivoted, then that might sort of hurt their case because all of a sudden we'll be like, okay, we got rate cuts coming soon. We can, maybe we can ring up the credit cards a little bit more now at this point because, those rates are all going to get cut soon. It's not going to be that way. They're not going to let you know. It'll be a surprise, I think, the first rate cut. And even then, I don't think we're going to do a lot of cutting. If you look at the overall interest rate, it was down around 2% for a long time in that area, sort of oscillating around 2%, moving anywhere from just below 2% up to about 3%, maybe sometimes it would get up to 4%. But for the most part, it's been in that lower area. But now that was all in response to the 2008 housing crisis. So that's when all of the rates had come down. Before then, the rates used to be much higher. Even in the 90s, the rates were up in the teens. So I don't think we're going to see a situation where we're going to go much below. I kind of don't think we'll go below 5 for a long time. I think what will happen is we'll go up one more, maybe before the end of the year, and then sometime in early 24 or even mid 2024, they may cut us back down to 5 and hold us at 5 for a while. But I don't see us going that much below it. So if anybody's holding out thinking, okay, well, I'll just wait until we get back down to 2% again, it's not going to happen. So we have to kind of keep that in mind. So let's see. Canadace. That's actually funny. Well, Vic, what's funny is I was once filling my name out. I was going to sign something. I think I was a volunteer coordinator at that time. I don't know what I was thinking, but I looked down and I actually wrote down Canada. Anyway, look up on Wikipedia, the Troy Westwood and Banjo Bowl. Be at the toilet because you're gonna pee your pants. Uh-oh. I don't want to do that. U.S. government shutdown, 99% likely. Yeah, there's a lot of issues right now with the U.S. government, and it's kind of weird. We're now at a point that the decisiveness between the two sides of the aisle is bigger than it has ever been. I have a feeling it's almost at the point that I think almost every president going forward is probably going to have impeachment action against them when the other side controls the aisle. I also think that it's just going to be much harder to get stuff done. So then we need. uh, I think we need to sort of get back to where people can work together despite whether they're Republican or Democrat or conservative or liberal up here or NDP. Um, you know, the decisiveness is okay to a certain extent. Like, yeah, you need to call out the other side on things that they're doing wrong, but you also don't want to get to a point where you hinder somebody for the sake of hindering them. Like, if they have a good bill, you need to let it get through. And in this case, this whole shutdown, I mean, we kind of got by the whole debt ceiling thing, and now we're looking at another possible shutdown, and that's just wow. That's just to me, that's just crazy. Vic says, anyone buy GIC on their stock brokerage? I couldn't find any at RBC Direct Invest at 6% these days. They were available weeks ago. Interesting. I haven't even looked on EQ Bank to see what they've been recently. I think the last time I heard it was something like 5.15, but I think somebody in chat mentioned 5.25. So, but I haven't seen any 6. 6 is nice. Enid says, bought GIC for RRSP from RBC for 5.75%. Oh, that's nice. For a year, not from a brokerage. Tangerine gives 6%, I heard. Okay. So, yeah, we have to look. And keep in mind, if we do have that one more hike, it's going to push these GICs up a little bit higher, and then we'll probably find those 6% a lot easier. Vic says, I predict oil $100, milk $10, gold $2K, interest 5.5%, GST 7%. Okay. Interesting. Oh, and Vic says, tell us at almost at 2020 lows. And it's interesting. Speaking of TELUS, I see over on Blossom a lot people saying, is this a good price to buy TELUS at? Yes, absolutely. If you're down at 2020 lows, that's not a bad price right now. It's really not a bad entry point for TELUS. TELUS is a solid stock. They're going to bounce back. To me, it's at the point now where it's like, it's low. It's not a bad place to get in. So I'm pretty much pro TELUS when it comes to their entry level point. Will they go lower though? And I think that's the issue. And sometimes that's what gets people down. You look at a price and you're thinking, okay, this is a good deal, but I can get it better. Maybe you can, but maybe you can't. So here's that thing. And this is where dollar cost averaging wins. If you sit here and think, okay, well, I'm just going to wait for it to come down a little bit more. Well, what if it turns around and starts going up and you're thinking, oh, okay, oh, this is just a dead cat bounce. It'll be back down. Don't worry about it. What if it doesn't come back down? Then you've lost out. Where at least if you dollar cost average, if you're thinking, okay, gosh, this is a great price, but I think it's going lower. Well, don't just sit on it. Buy a few. Let's say you have enough to buy 100 shares. Well, buy maybe 25, and then take a look and see if it comes down. And if it comes down a little lower, get another 25. And then if it goes a little lower, get another 25. But then at least if it goes up and it doesn't come back down, when you buy the rest of your shares, at least you got some of them at that price that was a good price. So it's hard to predict. And that's why dollar cost averaging, for example, removes the predicting from the market. And then you tend to end up saying, okay, well, I got some of them at a great price, some of them at a not so great price. And then, of course, 20 years down the line, when you look at it, they're all great prices because everything looks really, really good. Like if you bought, let's say a good old Bananco, we use them as an example. Let's say Bananco is $10 a share and you're thinking, it's going to go lower. It's going to go lower. Well, maybe it does, maybe it doesn't. But if you bought it at $10 a share, or maybe you bought it at $10.25 a share, well, 20 years down the road, when it's worth $25 a share, whether you got it at $10 or $10.25, it really doesn't add up that much. So it's just one of those things to keep in mind. It's one of the reasons that dollar cost averaging can be so powerful. Vic says BCE heading to 2020 lows. Yeah. I mean, BCE is not a bad stock. I do like TELUS better than BCE, but I still think BCE, even Rogers, I think any of the three, you're going to be okay in the long term. Now, Rogers right now can look really, really scary because they have all of that extra debt because of the acquisition of Shaw. But that's all going to average its way out, and they wouldn't have taken on all that extra debt to buy Shaw if it wasn't going to work out in the end. So, I think all three are good, but I think TELUS is going to recover probably a little faster than the other two, and I think it's a very solid stock. Zach says, I averaged down on TELUS a bit. I like the expansion on them. Awesome. Yeah, exactly kind of what I was talking about. Vic says, I'm a better investor for not having smartphone. Otherwise, I tinker too much with me portfolio. So I think he meant my portfolio, unless you're from Newfoundland originally, because then that would be with me portfolio or something like that. Oh, I just insulted everybody on Newfoundland, didn't I? Sorry, Newfoundlanders. Anyway, it's kind of an interesting thing. Zach says, that's good, Vic. I find myself at work checking my portfolio way too much. Yeah, absolutely. And here's the thing. Sometimes it's kind of like the more you leave your portfolio alone, because if you watch it all the time, constantly, you're going to be more than likely to tinker. And a lot of times tinkering with your portfolio can actually cost you money. Because you see something go down and you give into like the fear. So you give into some FUD or something and you say, oh, I better do something. I better remove this now. And then it's back up again the next day. And if you just left it alone, you would have actually had more money. So you always want to be a little bit careful, like make sure that you're not just tinkering with it for the sake of tinkering, and make sure as well that you're really thinking out what moves you're making and not just sort of doing an impulse move. All right. And Zach says, we already were there. Whoops. All right. Vic says, portfolios are like souffles. Don't check on them too often. Let them compound. Yeah, exactly. Give the yeast time to rise. That works well with banana bread too. Abalash is in the house. Hello. With population declining starting in 30 years due to fewer births, will current pattern of stock market rising over time continue to exist? That is an excellent question. I think it will. I think there's still going to be a lot of investors. And I also think we're going to get to a point that even though we start to look at, and there's a lot of studies that say that within the next 30 years, the world population is not going to keep going exponential as everybody has been thinking. It's actually going to curve around and come back down. It really boils down to how many people are investing. I mean, even right now, if you were to look at the percentage of people who invest compared to the percentage of people who have no clue, it's not that much. So if we continue to educate, if, for example, schools were to adopt investing as a curriculum and people start to learn and people get more interested in the stock market and investing, and I think with the way inflation is going, with the fact that, a dollar today is not worth what it used to be, I think more and more people are going to start moving into that direction. I think there is a huge, huge market for new investors out there. So it really depends on that. If the percentage stays the same, then yeah, we do have a bit of a problem, but it's a little bit further away. And I think as long as people are learning and people continue to sort of figure out about investing, I think we'll be fine. Zach says, I'm just glad I have experience with cryptocurrency, so I don't have weak hands. Awesome. Yeah, crypto will definitely help give you some diamond hands. Northwest Health cut dividends by 55%. Your thought? I don't think they needed to. Now, I just recently did a deep dive on Northwest Health, and fundamentally, they weren't in that bad a shape. I mean, I actually liked their fundamentals enough that I did move a position into them. Now, I did that position not so much for their dividend, but to ride that growth up. And in a sense, by them cutting their dividends, it actually helps me even further because it's going to really help with their growth coming up. And just to give you an idea here, I'm just going to pull up my Wealth Simple here and take a look at them. I just want to see where I'm at with that stock, because I believe I'm in the green. But it'd be funny if I get in here and I'm not in the green. I'd be like, what? All right, come on. Here we go. Let's see here. TFSA, we're going to go down here to, whoops. There we go. It's taking its good old time. Oh, look at this. No, I'm not in the green. It's actually calmed down the last couple of days. So right now I'm down about 1%. But I still want to ride it up. I know where they normally sit, so I think that will be fine. But for people who have been using it for the dividend, 55% is definitely a concern. I would say look at your position. If you are a passive income investor, you probably don't want to stay at this point. But I do think that you'll be able to ride it back up as the market recovers. Like this, the end of this week has kind of skewed everything in the wrong direction. You should hopefully be able to get yourself back into the green and find a good exit strategy, and then move to a different passive income stock. Now, tomorrow, or not tomorrow, tomorrow I'm filming it, but on Tuesday's video, I've actually found some passive income stocks well, they are passive income stocks. They're covered call ETFs. All of them are monthly payers, and they all have a record of positive returns every in my three terms. So the 3-year, the 1 year, and the year to date. So they're actually pretty darn good for that. And they would definitely be a good replacement for Northwest Health if you wanted to get out of them. Vic says, I invested huge in 2006, didn't check it for years. Otherwise, I'd have panic sold in 2008 and missing all the gains after. Yeah, a lot of people panic sold in 2008. A lot of money was needlessly lost. I also imagine too in March of 2020 when we had that big pandemic bump down, I imagine a lot of people probably panicked on that as well. So sometimes you have to just sort of diamond hand it, hold on, wait till the other side, get your money back. Don't realize some of those losses. Immigration will make up for lack of childbirth to a certain extent. The issue is immigration will only do that as long as people still want to come to Canada. So we need to sort of work on some of the other issues that we have in Canada. So for example, healthcare. I mean, if you're looking for a place to immigrate to, and let's say it's between Canada and the US, you can say, well, you get free healthcare in Canada, but you probably won't be able to see a doctor for a long time or have a family doctor for maybe 3 years. Some people might say, okay, well, maybe I do want to go to the US. Maybe I have to pay for the healthcare, but at least I have it. So there's different things, and also housing. If you want to come to Canada and there's no place to live because, the vacancy rate is crazy low and there's not enough houses. So these are the things that we have to balance off to be able to keep up that level of immigration. Zach says it's actually quite crazy the amount of financial illiteracy in a first world country. Oh yeah, absolutely. This is one of these things like I've never understood. Like I went through school, university, and I quite didn't. Oh, sorry, I was looking ahead at one of Vic's comments about a MacBook, but we'll get there in a second. Yeah, and I knew nothing when I got out of university about investing. Probably the most I knew about investing was maybe any time it showed up on a sitcom or somebody talking about, oh, I just went to the stock market and I lost everything. So a lot of people, I think, are in that boat. They think the stock market is for the rich people and that it's crazy risky, and that a lot of people don't understand. Even my mom, I was looking, I went to her one day and I was like, okay, well, I said, are you utilizing your TFSA? She says, oh yeah, I've got money in the TFSA. I'm like, okay, but do you have stocks? Oh, no, just money. Just got money sitting there. It's tax-free. I'm like, it's doing nothing for you. It's just depreciating. So she didn't quite understand that she didn't even know you could buy stocks within your TFSA. So I think there's a lot of that right across the board. Vic says, with climate change, Canada will become tropical paradise, and everyone from the hell of Phoenix will come here when it gets too hot for their summers. If only climate change worked that way, Vic. The problem is with climate, when the climate is getting hotter, it doesn't uniformly get hotter. So you get all kinds of effects. So, for example, it may become unbearably hot around the equator, and up here, it could actually get colder in some places just because, well, you take it. Let's say climate change were to result in a shutdown of the AMOC, so that's your whole circulation, things like the Gulf Stream, it'll get colder in Europe. Maybe a little bit colder in parts of Canada, but mostly Europe will get colder, and that would, of course, hurt the growing cycles. Definitely would hurt the olive oils even more. But yeah, it's not going to be uniform. So I don't know if it'll ever get to that point. But the other problem too is more energy in the oceans means we get more storms, more events, more forest fires. So be careful what you wish for, my buddy. Did you just flip a MacBook? Must have been easy buy with all the YouTube earnings. Oh, you'll have to watch what I've made in 1 year, and then you'll be like, oh my God. Oh my God. Do you go to the food bank? That's why you'll be asking me after that one. Actually, it wasn't even a MacBook. It was an iPad. But now most of the stuff almost everything I have, whether from the mic to cameras, a lot of that is mostly just financed through trading. So YouTube doesn't pay a lot until you get really, really big, or get to the point where you're starting to do sponsors. I have had offers for sponsors, but they have not fit with the channel, so I've turned them down because I'm not going to try to, say this video is sponsored by hole in the ground crypto. No, I'm never going to do that. So I'm just going to, just pull it out for a moment. So, okay. So Vic says, I'm trying out both purpose yield shares and yield max shares. Oh, trying both at the same time. Have to see how that works out. I do think that the yield max, there's definitely potential there. The whole idea of the synthetic covered call really, really, really intrigues me. And I just want to see some history behind it. I am thinking about doing another yield max video soon, just to sort of pull that all together. All right. And Lennon asks, what's the process and sources you use to access a stock? So financial analysis, will you share the techniques with us? I actually have done that for channel members. I've broken down a few things. So some of the things I will use. One of my big tools is actually a stock screener. So with a stock screener, and I do like the one that they have over on money.tmx.com. So TMX, that one there it's owned by the TSX. So TMX owns the TSX. So they have access to all of that raw data, and you can pull it up and you can say, okay, well, I'm looking for, let's say I'm looking for a high dividend company in the energy sector that pays a monthly dividend. You can put in all of these different categories, and then it will give you a list that fit it. Now, what I do is I look at some of the key things. Like return on equity is something I do love. So that has to be positive before I'll even look at a stock. If you have a negative return on equity, then you're looking at a pretty bad company. So I have a few things like that. I'll look at the debt to a certain extent. Even though I hate debt, sometimes debt is an important part of a company. A lot of companies do use debt as part of their business model. So I keep that in mind. But that's one of the things I use. Now, another thing I will use as well is a lot of times sometimes you guys will say, hey, check out this stock. And it'll be a stock I haven't heard of before. And I'll look it up and I'm like, oh, this is interesting. So I will go in that way. On the financial analysis, on the actually fundamental analysis side, I will look at, I'll use the data on 3 different sites. So I'll use some data off of the TMX site. I'll use data off of Yahoo Finance. I will also use data off of simplywall.st. They have a ton of data. Like simplywall.st, they're the ones that do my fair value for me, because I can do it on my own, but it's an aspirin sandwich level of calculation. So I use theirs only because of that reason. So definitely a lot of different things I can do. Now, what I can do here, Lennon, is it's been long enough that I've done it for the channel members. Maybe I'll do a video just to sort of show people a little bit of that for the regular folks as well, like how to use the stock screeners a bit. But right now, if for the price of a cup of coffee, you can become a channel member, and you can certainly go back and look at those videos now if you want to get a little bit of that going right now. But I do want to do that for everybody as well. Vic says, Candace, you work so hard in this space. Thank you. Very welcoming to all. Just take the sponsorships. I have integrity. That's my big thing, Vic. I've had a few really strange crypto projects reach out to me, and I've said no. There's one sponsorship that I almost took. It was for a mineral and mining report that it looked promising, but then what they wanted and what I was willing to do it for, they thought that because I only had, at the time, I was just shy of 2,000 subscribers, so they were thinking I would do it for next to nothing, and I was like, no. If you want to use my time and you want a fully dedicated video and you want all of these mentions throughout other videos, this is I gave them a price, and I said, this is my lowest, this is my bottom line. And they're like, that's a little bit too much for me. And I was like, well, that is my bottom line. So, because I'm not going to go and do a whole bunch of work for another company for peanuts. So I look at it that way as well. Now I've passed 2,500 and still climbing. So I look at it this way: the better sponsors will come. There's a few that I would love. Like, I would love to get a sponsorship from Canoe. I love Canoe. So that would be, to me. But they might look at it and say, you're already promoting us enough. We don't need to pay you. You're doing it already. So they might look at it that way. But yeah. Anyone for QQQY? I love Qs. I love all these QQQs. You will see at least one QQ tomorrow in the video. I will put that out there. Mostly Tip Ranks and Yahoo Finance for me. Yeah, there we go. Another place too is if you go over to Blossom does have some categories there. Like, you can look at the most viewed stock or the most held stock by everybody on Blossom. And you can look through that list and say, I didn't even think about this company. Maybe I should take a look at it. And then do your due diligence, of course. Vic says, company debt is like mortgage, a necessary evil. Sure would be nice to have Canadian money to buy a house, but not realistic. Yeah, I can understand that. Vic says, Candace, you are the closest thing I have to a friend. Holy banana bread, Vic. Well, thank you for that. Yeah, I'm glad that I am here to give you a little bit of warmth and happiness in your life, Vic. So, and you can always reach out anytime you want. So there's nothing wrong with that. All right, let's get to our next story. Boop-a-doop-boop-boo. We're slowly getting through the news. Number 7. It's funny. It's my panel number 7, which is story number 6. Or actually, oh, look at that. We already did that one. I didn't even change the thing for that one. Holy banana bread. That's my bad. All right. AI hustling. And we just got that. And we have our crypto rounds as well. So every week I do want to touch on some crypto stories as well. So there was a survey that came out. It was from Morgan Stanley. And so apparently the incomes of gig workers who use generative AI were 21% higher than those who don't. So AI is starting to make a bit of a big difference. Now, this is really interesting because in Canada, according to H&R Block, 28% of Canadians now have side hustles. So side hustles are becoming a big thing. Now, back in 2022, so just a year ago, it was only 13% of Canadians have side hustles. Now, part of it is, of course, the economy. With money not being so powerful anymore, people need those side hustles just to be able to feed their family. So that's not a great thing. I don't think it should be at that point, but it is there. The side hustle, business is there. People are doing lots of them, whether they are, let's see, starting a YouTube channel, or maybe you're making thumbnails, maybe you're putting your services on, there's all kinds of different things that you could be doing that on, but it's really a kind of a good thing. Let me see here. Abalash says, is anyone in the green here? I'm currently at negative 37% and beating my managed account by 2%. Now, what is that time frame, Abalash? Because if I look at my account, and I put this up here, I think I'm still here. So when I look at my overall account right now, my overall account is up 7.14%, but that's for a longer period. Now, if I look at it for just the last year, yeah, it's up about just over 7% in the last year. If I look at the last 3 months, oh, never mind. I just realized these numbers are not changing. So it's up 7.14% all the time. Ah, Wealthsimple, you should give me better numbers. But Wealthsimple does not. I have to look in Blossom. I think Blossom might give me some better data. But yeah, so let's see here. Let's go here. In real life, I'm a bit of a loser. Not all that wealthy, heavy, and lonely. Mountain Finance is where I feel safe and welcome. Well, you're always welcome here. You know, and there's nothing wrong with, there's nothing wrong with anybody in particular. So, you know, I hate to see people calling themselves a loser. Sometimes I like to say that maybe instead of a loser, maybe you're a loner. Maybe it's by choice. Maybe it's not. Maybe you're not wealthy. Maybe you're heavy. Maybe you're lonely. But, you can always work on everything that's out there. And of course, you know what? Much harder done than said. So, it's a little bit harder to, especially if you don't have anyone to keep you accountable. It's easy to get up and say, okay, I'm going to do 30 minutes of exercise a day. But if you don't have anybody who's there that says, hey, did you do your exercise yet? It's easy to sort of skip it and things like that. But, that's what I like about the internet. The internet is a great place that you can connect. That's one of the reasons I try to keep my consistency as well, is that, it's not just you, Vic. It's everybody. I like people to know that, what, Sunday afternoon is the time I can spend some time with Candace, and she'll be here every week, and unless something horrible happens, like power failure, like we had that drought not that long ago. Well, it's more than a year ago now, but I lost power for almost 5 days. So, well, it wasn't so much. I think it was like 3 days of power, about 5 days before I got the internet back. So, well, we're definitely here. And one of the things too, just to sort of go off on a tangent here slightly, I've already made the channel over in Discord. I'm looking at trying to get it, figure everything out over there, because we might be able to get like some just rooms where people can come in and chat with each other. That would be kind of cool. That you could go in there and hang out and all of that fun stuff. So we are looking at getting some stuff there just to make it a little more interactive for everybody. I know King of Day says sponsorship is not worth it if you have to lower your integrity. 100% agree. Agreed. Thank you for not selling your soul for money. No, I mean, I will sell my soul for money if it's the right amount, but I probably wouldn't. But I like to joke and say that I would. Like, $1 million and I'll be promoting some kind of a doodad. Yeah, there we go. So in the last 6 months, okay. All right, that makes sense. And let's see, I'm at -4% and I invest since February. Let's see here. My advisor has averaged 6% return over 25 years. So that's a little low, but here's the thing I always say is when you want to know whether or not your advisor is doing a good job, pick a time period, pick the time frame that you've had them, and look and see what the overall market did in that time frame. If the overall market, let's say the overall market did 8% over those 25 years, then you've got a bad advisor. If the overall market did 5% in those 25 years, well, then they're at least beating the market. That's something you want to try to find in a financial advisor, is that they're at least beating the market. To me, if they're not beating the market, it means that they're either not paying attention to the market, they're not making adjustments the way that they should be. So, and Vic says, I'm doing better with the S&P 500 ETF on my own. Yeah, absolutely. Like I think most of you guys are do-it-yourself investors, and that's your goal. That's your goal. Like always look at what the market's doing, and your goal should be to at least just beat it a little bit. If you're not, then it's time to take a look at your portfolio and take a look at what you're doing and maybe see if there's a weak spot, and then look at what you can do to fix that. And let's see here. Larry says my Tesla puts up 45%. Nice, nice. Ah, yeah, Tesla is one of those stocks you can make a ton of money on when they when they turn around. And right now, I'm very bullish on Tesla at this moment because there's a lot of stuff going on behind the scenes that really makes me think that Tesla has a good opportunity. All right. Vic says, don't rub it in, Larry. What are options? Vic, I know you know what options are. Mario says, did you do a video on Parkland Fuel? Parkland Fuel. I don't think I did a standalone, but if you want, I can add them to the pool. And let's see. Vic says, my advisor has me in a mutual fund. Okay. I mean, there are still some mutual funds out there, but mostly ETFs are there just because, yeah, you just spoke it yourself there, Vic. Lower MERs are better than mutual funds. So yeah, I think ETFs have pretty much, in most cases, ETFs have replaced mutual funds. There may be the odd exception out there. All right. And that takes us to, whoops, let me switch us over to the thing. There we go. That takes us over to the crypto rounds today. So our first little story in the crypto rounds is about, well, NFTs. So a report came out from a group called DAP Gamble, and they found that 95% of all NFTs are now essentially worthless. Now, right now, there's about 23 million people out there holding NFTs, and only 1% of NFTs are worth more than 6,000 USD, so United States dollars. So yeah, NFTs turned out to be, oh, I hope none of you guys got sucked in too bad with NFTs, but they did turn out to be not a really good thing at all. Now, a little bit about Ripple. Ripple, they kind of talked a tiny bit about their legal bills. So Ripple's legal bills in their ongoing battles with the SEC, they just hit 200 million. So that's how much lawyers have been making off of just Ripple's legal bills. I bet you the SEC is probably paid more to their lawyers than that. So it's almost like almost like a David versus Goliath. Now, one last little story about crypto this week, and it all goes back to FTX, good old FTX. So Stanford University is going to return the gifts it received from FTX. So here's what happened. So a lawsuit was a lawsuit earlier this week actually showed that the school received millions of dollars in donations from the FTX Foundation. That doesn't sound too hokey, but when you look a little bit deeper, you'll actually find that Sam Bankman-Fried's parents, who are both tenured Stanford law professors, they kind of funneled the money out of FTX into the company's into Stanford. That's where these donations came from. So that is money that is getting back to FTX that can then go to help paying off some of their creditors. So not a great thing. All right, let's see here. Vic says, my advisor is a family member who needs my business. Oh, yikes. It's hard to have family members working for you because anytime their quality is less than par, it's harder to fire family members. So I always say, be careful about hiring your family, especially with something as critical as that. But I can still respect that. You probably want to give them your business, but you just have to realize that you doing a lot more on your end with the do-it-yourself side is probably going to be a good thing in a situation like that if they're not doing a good job. Anyone seen Dumb Monkey or Dumb Monkey, Dumb Money? Oh dear. I'm not sure what you're talking about, Vic, but we'll leave that alone. Larry says, my hedge fund is 80% devoted to Doom Currency Real Estate Crash ETFs, SQQQ, and eviction companies. The rest are long-term dividends. I'm expecting a 400 to 600% return next year. Holy banana bread. I hope you get that. But that is smart. Looking at some of the real estate crash eviction companies, they're going to be busy. They are going to be busy. Vic throws in that Sam Bankman-Fried is fried. Yeah, he's Not in a good place. Definitely not in a good place. So next week in Canada, not a lot coming out when it comes to reports. On September 29th, on Friday, we do have some month-over-month GDP data that's coming out. So it might give us a general idea on how the rate hikes are crushing the economy. Oh, down in the US, we got jobs data that's coming out at the towards the end of the month. Well, it is towards the end of the month, coming out on September 28th on the Thursday. And there's also personal consumption expenditures that are coming out on Friday. So we'll have to see how that all looks. Give us, once again, these are just reflections of how the economies are doing for the two countries. There's not a lot earnings-wise this week coming up in Canada. The only one that was kind of interesting is BlackBerry, but at the same time, BlackBerry is expected to have a negative EPS. So I think the only people really interested in BlackBerry tend to be the Wall Street bets folks nowadays. So take BlackBerry with a grain of salt. And all right, there we go. And I did mention as well at the beginning of the show, the stuff coming up on this channel. So on Tuesday, we have covered call ETFs that have seen positive returns. So we got those on Tuesday. On the Thursday, we got a special video. It's how much I made in 1 year monetized on the good old YouTube. So we'll break that all down for you guys. Actually, today is a highlight day. So my most watched video is actually an OAS video, so old age security video, and it's just been doing really, really well. And this morning it hit 10,000 views. So it's like, it's the first video to hit 10,000 views. So I was excited about that. That was just kind of cool. And then, of course, next week we'll have our normal this week. And then the following week is when we got a bunch of cool stuff as well coming out, because we'll have the following Saturday, we'll have a extra live stream. It's going to be our 2-year celebration of the channel. So it's going to be really, really kind of cool. So we got a lot of cool stuff coming up. I might be looking at, tinkering a little bit with the background, a couple things like that. But for the most part, pretty darn excited, and we'll see how everything turns out. All right, let's see here. Vic says, I'm thinking of buying, reality in U.S. exchanges. Okay. Sorry, realty. That's reality. Is at a great price now. Yeah, O is not, I think I've had O before. So Mary says, thanks for all your info and kindness. Okay, well, I do my best to be kind. It says, congratulations. So yeah, so that's what I got coming up. Hopefully you guys all have a fantastic week planned ahead for you guys. Yeah, I think it's just going to be, a really good week. I'm looking forward to a whole bunch of different things. And as I said as well, for you channel members, we're going to actually be doing the votes pretty soon on what you guys want to see for your next exclusive stream. That's coming up pretty darn soon for October. So it should be pretty darn cool. I've already got a couple of suggestions in. I think I dropped an email the other day. I'm going to drop another one here probably in the next 2 days. And then we'll have a vote on what our main topic will be for that live stream. So you guys are all welcome, of course, to join in on that. All right. King of Day says, I think BlackBerry should change its name. That name carries a negative connotation in the stock market. I would agree. If they are serious about staying in business, they probably should look at, I would almost say let yourself be bought out by somebody else and follow under their name. But great chat. Thanks, Candace. That AOS video was very helpful. Oh, well, thank you, Muggsy. Thank you. So yeah, and and I keep throwing more retirement content out there as well. None of them have taken off the way that OAS video. But here's the thing about that OAS video. It's like, it did normal when I released it. It exploded because I released it in February, and it has exploded in waves. Probably 2-3 months after the fact was the first time it actually just started doing well. And next thing you know, it's just flying up, and I'm just like, what? Why that video? But it keeps coming, and now it's starting to peter out again, but it'll explode again. This one just keeps on exploding. So those of you who are interested in, of course, all of the retirement videos, there are playlists for that. And there's some, my favorite one is actually the roadmap one, but I'll definitely put more of that content as well. I know I do want to do a retirement, sort of a retirement focused investing video. So, how your portfolio should look when you're moving into retirement. And for the same part, I probably would like to do one for each age group. I know early, funny thing is, very, very, very early in the channel, I did a baby boomer, a Gen X, a millennials, and a Zoomers investing. But I think I could do a really interesting version of that now. So that's something I'm definitely going to be looking at doing as well. So we got a whole bunch of stuff that's coming up. Nick says, what do you think of Tiny Limited? So tiny.v, Andrew Wilkinson, Canadian millionaire and entrepreneur. I've never looked at them, to be honest, but let me take a quick gander right now. Tiny.v, there we are. The Tiny Limited. I will take a look here and see what do we got here. All right, so they haven't been around for that long. So I do see them on the 1 year. So 3.5 per share. They do have a negative EPS, so that always worries me. I don't like to see a negative EPS, but let me see what they're doing here. So e-commerce software tools to start and grow their online stores. Well, they do have quite a competition here with some of the other companies out there right now. Well, big one being, of course, Shopify. But yeah, I would have to look deeper into them. But at the initial look, I'd be a little bit worried about a negative EPS. I'm always worried about that. And let me just give me 1 second here. I'm going to dig a tiny bit deeper. I do want to see what their return on equity looks like. Let's see here. Oh, they don't even have a return on equity yet. EPS negative, PE is pretty big, 45.60. So maybe they're expanding. Maybe they're trying to. This is one that if I was very much behind what they were doing, I would certainly look at it, but I would not, at this point, I wouldn't put a lot into it. It would be more of a gamble until I got a bit more data. So I'd want to see a little bit more history on them. And that's one of the reasons I do try to avoid some of these smaller, I call this one here, like anything under $5, I call it a penny adjacent stock. It's technically not a penny stock, but I'm a little bit careful with them. So let me see. Do you think DFN will recover? So that's a split core. It will probably look a little bit better once we get into some better, into a better market. I tend to, for not all split cores, but a lot of the split cores, I tend to only invest in them when we're in a bull market, because then I know that their dividend's not going to be interrupted. So if you look at DFN in the past, you'll see, look right across the whole pandemic, and you'll see there's been lots of disruptions with some of them. A lot of different ones have even suspended their dividend for 2-3 months over the pandemic. So I try to avoid stuff like that. I do like the split cores. They have really great dividends, but like I said, I need to have a stable market. So that way there, I know they're going to be, like, for me, they're short-term investments. I'll keep them while we're in a stable market. Once the economy starts to go back down again, I'm going to probably get out of them. I also will only put them in a registered account, because you are looking at ROC with a lot of the split core, so return of capital. So basically, they lower your average cost base as they give some of that money back to you. So that's kind of one of those things. If you have it in a registered account, though, return of capital is nothing. It doesn't really mean anything. But yeah, definitely, Mary, with DFN, I mean, if you're in a situation that you have it now and you're sitting in the red, chances are, as long as the economy, like if we go into a full-scale recession, you may have some more interruption in dividends. But as long as we don't go into it, if we do have the soft landing, like some people think we'll have, you're probably fine, but it may take you a while to get it back into the green. So you'll just be looking at it as a source of income at this point in time. And that's what, I mean, a lot of the really high dividend ones, you kind of have to look at them as sources of income. So you're not really getting like when you see somebody has a dividend of, 15%, you're not picking that stock up as something that's going to grow. You're picking it up as a source of income, something you can throw into your TFSA, and you'll have some tax-free income coming from it. So that's kind of one of those things with a lot of covered calls are that way. Not all of them. There are a couple of exceptions to the rule, but for the most part, you kind of have to realize what something is going to do. Like there are investors out there who will be like, anything that has a dividend above 6% is not sustainable. There's even people out there who says, no, don't even touch anything with a dividend above 4%. I don't quite go that far. I tend to be a little bit, I'm not quite that conservative when it comes to investing. But you have to determine what your own risk level is. You have to and you also need to know what it's designed to do in your portfolio. And these are things too that I do want to cover in some of these, like some of the retirement investing and the different age categories. So we're going to look at some of that stuff going ahead into the future. All right, everybody. We've been here for a good hour and 20 minutes, a little bit longer than I normally go. Well, sometimes I can get distracted pretty darn easy. Anyway, thank you guys all for being here. This has been a fantastic afternoon. And we will, of course, see you again next week. And then remember, the weekend after next, you get a double. You get double me. So that's kind of be cool. It's almost like the Double Mint Twins if you could watch Saturday and Saturday and Sunday at the same time. I know probably nothing like the Double Mint Twins. But anyway, we'll leave it at that. Everybody have a great rest of your day. And I will see you guys all really, really soon. Bye, everybody.